TikTok, Jim Malone here. I'm going live on both TikTok, Facebook, and Periscope. Periscope, of course, you can reach by www.pscptv/Dallas Trading Floor. Interesting day in the market. We're entering earnings season, and of course, a lot of opportunities to make money in earnings season. And I want to just show you a few of the plays that I'm looking at to do possibly. These are typically what they call straddles. It's a good way to go in earnings season, and there's also some other more directional plays in the market. But it's an interesting time. Interesting time in the market. It is definitely moving up. I mean, the market is moving up, and we're coming into earnings season now. The big companies that are going to be reporting are basically the tech companies, and I just want to kind of run down some of the ones that are going to be reporting very shortly. Apple is going to be reporting on the 30th. That's only 3 days from now. Thursday. Microsoft is going to be on the 29th, and that's been doing well as well. Facebook, which has really been showing some nice strength, the 29th as well. So Microsoft and Facebook, two of the very biggest stocks out there, are going to be reporting basically next with this week. So this is a real interesting time in the market. Also, Tesla is going to be announcing its earnings on the 29th, Alphabet on the 28th, Boeing on the 29th, and then Exxon and Chevron both on Friday, which is May 1st. So we have an absolutely packed thing. Basically, the whole thing is going to announce this week. So we'll see how well this stay-at-home economy has been working. I think you might be surprised. I mean, I think at least for now, it seems as if the market is moving higher. So what can you say? I'm definitely surprised. I'm surprised that we haven't retraced the lows on the spider, but then again, there's been a huge amount of stimulus put in. Now, for sake of full disclosure, I sold a naked call on Zoom. It then went down, which is good for me because as it goes down, of course, it increases in value. I closed that. I closed that position this morning, and so I made a nice little 5-banger on that. Not a huge amount, but better than a poke in the eye. So a good thing there. Basically, I just wanted to kind of show you basically the uptrend that we're seeing in. This is when we hit the peak here. Of course, this is the trough down. And this is March 23rd. That's kind of where we hit the bottom. And as you can see, we've been moving steadily higher, much to my surprise. And this is the 200-day moving average. We didn't bounce off that. We went right through it. So at least for now, we may not be testing. We may not be testing the lows, which is very surprising. But it's always surprising. The S&P is up today. The Dow. The NYSE volume is up, and the Nasdaq volume is up. So it's very interesting. We're seeing just a lot of stuff here. Now, a stock that I want to bring to your attention, and I think this is a potentially really excellent play, and this is on AMD. I just wanted to bring this to your attention. AMD is now number one in its category in the semiconductor industry, and the semis have been somewhat beaten down, but they're going to lead out of this downturn. So, as you can see, this is when I took this picture a little bit earlier this morning, and we are up basically today. This has the potential of moving basically above this line. Now, Why is that important? Well, the buy point, we're closing in on the AMD buy point. The buy point, as predicted, and basically what that says is this is where it ended before the downturn in the market. It's 59.37. So we have a situation where, we may be in a situation that would make sense to potentially ease into maybe a single or a double position in AMD, Advanced Micro Devices. And why is this surging? Well, one of the major reasons it's surging is because we are seeing tremendous demand in the cloud providers for for chips, for basically data center chips. Intel is also in this space doing very well, but they're more diversified. They have a larger overhead, and they really have not as much room to grow. AMD, on the other hand, is coming in. They're taking market from some of the other majors, and they have some very, very good technology coming forward. So this is an area that I want to kind of show you. As you can see, we have a composite rating of 99, and look at this relative strength indicator. This is very interesting. This relative strength indicator is 97. That means that currently AMD is outperforming 97% of the market. So if you're looking to build a watch list for stocks that you might want to buy or even buy options on, this is something that you might want to look at, because I think it's a strong play. It's a strong play, and you're going to get some very, very good action on this, I believe. Is this going to go to 100 tomorrow? No, but in the long term, long term meaning about 3 months in my world, I think you're going to do very well in the stock. So if you might want to put this one on your buy list, it's definitely on my buy list. As a note of full disclosure, I am currently not in this stock, but when it hits the buy point, I am probably going in with at least a full position. And let me just tell you kind of what a full position is. If you had a model portfolio that had, let's say, $100,000 worth of value in terms of capital, a full position would be approximately 1/8 of that, or $12,500. So in the case of AMD, a full position in AMD going into the stock, if you had a $100,000 model portfolio, would be approximately $12,500, or approximately 200 shares of AMD. So there you go. That gives you kind of an idea of how to size your position if you're moving in. Now, is it a good time to get back in the market? Well, it seems to be for some things, but it can turn down. So even with stocks that have excellent fundamentals, such as AMD, you always want to set your stop loss at 7% below where you're paying for if you're going long. So that's just a stock that I would like to really, really highlight here, because I think it's really good and strong. Okay, I have some questions here from people, and I'm going to go ahead and push them up. All right, let's see. And this is coming from Market Trader. SPY will hit to, yeah, this is really interesting. Thank you, Market Trader. Appreciate your comment here. SPY will hit 295 to 300 before it will change direction. Looks like a 200-day moving average will be the next resistance level. Boy, do I ever agree with you. This is a potential to make some short-term gains. So currently, just for sake of full disclosure, I'm all in cash, and I've been selling. I've been selling calls, but up till now. But I'm currently in cash. I'm waiting for the market to possibly retrace down to the levels, and and the spider is a really key indicator here, because the spider is going to show us when we're bottoming or near the bottom. And of course, on March 23rd, it hit 218. That was his all-time low, at least in the short-term all-time low. So I do agree with you very, very much. By the way, Market Trader, that's really good. Let's see. All righty. Next question. Thank you very much for these, by the way. Toll Brothers is performing really well. Would this be a good long-term stock? I would say no. And I'll tell you why I don't like Toll Brothers. Toll Brothers sells a product that is a very good product. If you've ever been to a Toll Brothers a subdivision, but the problem is it has a demand problem. This said, the primary people that are going to buy a Toll Brothers house are people that are in the upper income. The problem is and many of the people that have purchased them, they're attorneys, they have, or they're other people that they typically have good income. Now, a lot of that typically is other rental property and stock. So I don't think that going forward, because of the shutdown in the economy, that we're going to have some problems in the rental sector. And for this very reason, I don't think that Toll Brothers is a very good buy, because there's going to be a glut of nice big houses for sale. So actually, and I don't know if you know this, but if you look, you kind of anecdotally, you can see this happening in places like Los Angeles, places like Hollywood and Beverly Hills. Those houses, some of those houses are sitting on the market for 3 and 4 years. And I personally, right now, have a house in Monterey, California, which is near Pebble Beach, above, and we have a situation where we have a renter. We've had a renter for 8 years in this property, and guess what? They can't pay the rent. So, and this is a relatively expensive house. It's not, it's not ultra high expensive, but I don't think Toll Brothers going forward is going to be very weak demand. If you're looking for the housing sector, I think you might want to look at D.R. Horton, which I think, or Lennar, because I think these are fundamentally better. They typically build more middle class type housing, and I think that's really where you want to be coming out of this. So that's just my opinion. So that's the thing about Toll Brothers. I think you should be very careful with Toll Brothers and staying away from it, just because it does have some issues in terms of the affordability. Now, another stock that I want to put up here is Nvidia. It has a buy point of 275.50. Now, this is a more medium to longer term play. The reason this is such a significant stock, as you can see, you say, "Holy cow, Jim! Why are you putting this one up here?" Well, the reason I'm putting it up there is it's past its buy point. I suspect this is going to back off a little bit, but I think that buying this above 275.50 is potentially a good move. As you can see, the composite rating is 99 on this one. It's up extremely strong today. This is just today. It's up $10. Now, I think it may back off a little bit of this, but this one is on fire. Why? Because this company is the leader in AI chips, and AI is just going to be in everything. And I think it's a very, very important technology. And always, what you always want to do in any stock market is that you want to buy the leaders. I know that, I mean, in my normal life, I'm kind of thrifty. So I look for the best bargains and that kind of thing. But bargain stocks are not really the best, because bargain stocks typically bring with them a lot of risk. Why? Because they are bargain stocks. You want to buy as much quality as you can if you're going long on the stock. Now, if you're going short, that's a different story. But and I'll cover that later. But if you're going long, you definitely want to be, you want to be with quality. So that's what these are kind of my long suggestions. Hey, do you make every trade on the same amount? That's a really good question. Thank you very much. Here's the thing about my position sizing. I've talked a little bit about this. The way I size my position is very standard, in that I don't try to trade any more than 8 full positions at a time. Why 8? Well, because I find that anything more than this, I can't basically keep track of it all. I mean, I come across these people all the time that say, "Well, how many positions do you have?" And they'll say, "Well, I have about 25 stocks." Well, that's great and all, but I have trouble keeping, I like to go from about 5 to 8, 8 being my maximum. So I have what they call positions. Well, this is standard in the industry, so it's not my invention. And that basically is, if you have a $100,000 portfolio, a full position is going to be about 1/8 of that, or about $12,500. So in the case of a relatively expensive stock, such as an Nvidia, a full position might only be 50 shares of that. So I might want to trade that with options. Whereas if I was trading, for instance, a full position on AMD, my sizing would be over 200 shares. So there you go. That kind of gives you that kind of gives you an idea. So that's how I do it. I typically, if I'm putting my toe back in the water like I am now, because I've been primarily short term and all cash, and I'm looking to possibly go long on some parts of my portfolio right now, especially in earnings seasons. I'm going to probably do some earnings season trade, and those are called called Straddles and Strangles. Basically, what I'm doing here is I just want to say that that's how you size you size in. It's not necessarily by the value of the stock; it's by the size and the amount of what it represents in your portfolio. And typically, there are 8 full positions in an average. And so, even if let's say you only had $10,000 that you have as capital, well, you do the same thing. Your full position is going to be now when you're lower than $50,000. Typically, you want to reduce those numbers of full positions down to about 5, and that'll give you the appropriate sizing. So, with that rule of thumb, if, for instance, you were if you had $10,000, and the appropriate sizing on your positions would be 5 positions, 5 full positions, and so in a $10,000 portfolio, you're looking at a full position being equal to about $1,000. I mean, excuse me, about $2,000. Excuse me, in a full position. Below 50,000, typically you want to have five positions, full positions, and then above, if $200,000, $100,000, approximately 8. I try never to trade more than 8 positions at a time. Okay, next question. With all this optimism due to the fact that everyone is opening up slowly this week, May will last till mid-May. I think so. That's great. I really like your comments. Yeah, I mean, there's going to be a lot of optimism this week. So, this is a week maybe to pay some short-term potential plays here on the options. Basically by selling puts and then buying calls, having the puts, of course, having the puts, of course, pay for the call, so you're revenue neutral on that. This might be a good way to play the earnings season. Hopefully, I'll have more of those tomorrow that I can kind of show you. I just want to kind of get you ready for that, because we're in earnings seasons, and definitely earnings seasons is a time that you can make some money. So there you go. All right, now I have some questions from everybody else that I'm sorry I've been ignoring, and that's terrible, because you guys at TikTok are the best. See, what is your opinion of Robinhood? Well, here's my opinion on Robinhood. I was initially recommending Robinhood a lot, because I still think it's got a really good there's a really good idea. But here's the problem that I've seen with Robinhood. Robinhood has issues related to market access, and I didn't realize this until we had that market volatility early in March, in that they said that their system shut down. I don't quite believe that. I think that what happened was they were denied access to the market because it was so volatile. So the best customers got to execute, and the Robinhoods and the second tier and the third tier players didn't. I use TD Ameritrade, and the reason I do is because it's one of the largest. It has some of the largest volume of any broker. Now, also Charles Schwab is in there. They own TD Ameritrade, actually, but with these really big brokerages, they have the ability to have specialists that are able to trade and get your orders filled. This became very, very apparent to me trading in the downturn. I was able to trade out of all my positions almost instantly, where everybody on Robinhood basically couldn't even get a bid. So there you go. I think that's the reason. It's not because I dislike Robinhood. It's just because I don't think they have the market capability that some of these other bigger, more capitalized firms have. And so that's just my opinion. Okay. Let's see. I trade Forex and been just paper trading 180. Wow, wait, that's excellent. Here's the thing about switching from real money to paper trading. I think paper trading is a great way to learn. And here's the thing about TD Ameritrade. Again, I probably should get a commission for them, but with day trading, it can be very difficult to master it. So using the paper trades is a great way to go. But that said, you don't really learn to trade until you have some skin in the game. So what I would recommend doing is paper trading for, if you're getting comfortable in paper trading, go to trading real money, but trade very small positions. Trade as small positions as you can and keep very careful records. That's how I did it. And it helped me a lot in terms of what I was willing to take a risk on and when I was willing not. The biggest problem with paper trades is you think, oh, it's just a paper trade. It's nothing. And you don't take it seriously. And so you tend to be less risk averse. This is something when you're trading real money, this teaches you to be somewhat risk averse. And this is a good thing because you can lose a tremendous amount of money very quickly if you're not. You got to make sure that you're protected. And that's the main thing. So that's the thing. If you want to graduate to from paper trading, you want to go to very small positions, real money. And the reason you want real money, again, it's just if it's your real money, you're going to be a little bit less risk averse. Hopefully you're not going to be frozen up and not do anything, because that's as bad as being totally risk unaverse. But that's what I would recommend doing. So that's my opinion. Okay. Let's see. All right. The SPY put I grabbed last week is looking good. Excellent, man. That is excellent. Excellent. I'm glad you're trading the SPY. That's a good thing to trade. Sorry, SPY call. It's looking good. Okay, excellent. Yeah, I mean, last week was definitely a time to be buying those calls on the SPY. It was excellent. Unfortunately, I was fooling around with Tesla. I broke even after many machinations, actually, at about $150. But I was stupid to jump in on Zoom, and fortunately, I hedged my position. I sold a call, and I put a stop loss in, and sure enough, I got stopped out. But I fortunately had that call, and that call actually made me some money. So it's all about it. A lot of times it's about hedging. I'm a big believer in hedging. So that's just one way to kind of look at it. All this optimism is due to the fact that everyone's like, yeah, exactly. Let's see if I have another comment. Wow. Okay. All right. Oil is going down again. Yeah. Stocks like transport oil are good buy at the moment. No. No. I wish I could say that, market trader, that oil was great. I have two ones that I want to show you. Basically, both Chevron and Exxon are going to announce. I'm going to announce this week. Chevron's going to announce on May 1st, and so is Chevron. Oil is a really tough place to be right now because, unfortunately, the market is not favoring it like it used to. It's amazing because just a short time ago, 10 or so years ago, the oil sector was something like 20 or 30% of the S&P. It's amazing. It's like about 3% now. So I don't know if you want to be there right now. I just don't think you're going to make as much money. I think that there's going to be a lot of, and this goes with the financials too, especially financials that have lent a lot of money to the oil sector. There's a bank here in Dallas, Comerica Bank. As a matter of fact, I bank with them. So maybe that's not such a good idea. But I bank with them, and they're heavily invested in the oil sector. So, so there you go. I mean, you've got they're heavily invested in it, and it doesn't necessarily work as well for them. So there you go. It's a strange thing. So I wouldn't. I'm very leery about the about. I bought Boeing some time ago and thought, okay. Here's the thing, Boeing about Boeing. It also announces this week. Right now, it is trading. It's trading at about 130. I think. I can bring that up. I think I can bring Boeing up here. Let's see if I can bring Boeing up on the screen for you. Hold on. Oh, maybe not. I'll go back to my slides. Here's the thing about Boeing. Boeing, I believe, is going to go down further. So I think that it might be a good short candidate. I'm looking to short Boeing. I'm long and up with yes. Yeah. Excellent. By the way, thanks, Earl. Thanks for dialing in on YouTube. Please like me on YouTube, please, because that way I can get a URL and things will be really good if I do that. I think it's excellent that you're long FNV and KL. By the way, for everyone out there, FNV is Franklin, Nevada gold. And KL is also a gold miner. It's based in Canada, but it has tremendous holdings in Australia. I do think that the gold miners, and these are the best of the gold miners. There's a lot of gold miners out there. It's kind of like the oils. You have 2 or 3 really good ones, and maybe 5 or 6 good ones, and then the rest of them are not that hot. There's just a lot of people. Why do I like FNV? FNV basically takes positions in all the best gold miners. So they're a junior partner in a lot of good stuff. So I believe that they are kind of move higher. And I think that's good. Now, here's the thing, Earl. Please move your stop losses up. If you're long in the stock and you don't have them, you don't even have options in them, please start moving your stop losses up. Now, a way that you can generate a little bit of money is to potentially sell calls against the stock that you already own. Now, here's the thing about selling covered calls. It's a great strategy. I use it all the time. I generate monthly income doing this, and it pays my rent. So the thing when you sell a covered call is that you need to have at least 100 shares of stock. You have to have them in 100 multiples because that allows you to sell one contract. Typically try to sell these calls out about 4 weeks. And why? Because they have this thing called theta, which is the decay on the value of the call option. So if you sell the call option, somebody is paying you money for the right to buy that stock, typically at a higher price from you later on. As it gets closer to that expiration date, the value of that option will naturally go down. And that's what you want to capture with when you sell the call, because you want this theta decay that will bring you cash flow. So it's kind of an interesting way to play it. Let me just take a quick look at the options on KL. I've been a big fan of KL, and I think it's a tremendous trade. Let's see. Let's look here. Kirkland likes gold. The next option expiration for Kirkland Lakes is basically the 15th of May. Now, if you could sell, and this is up today nicely, there is a May 15th, there's a May 15th 40 option. And I don't know what your price is when you went into Kalon, but you could sell this, and it is paying $4.60. So that would be very nice. You could pick up $460 if you had 100 shares, and you would trade away the rights, of course, to buy that stock. But it would be a really great way to go. So that's a good trade potentially for KL. And again, I highly recommend KL. Gold not fold. I think so. Well, I think we are, because of all this liquidity that's been injected into the market. I think we're going to see that. I still think cash is king. To be honest with you, I mean, I think cash is king, but a lot of people are moving into gold, and I think it's a real. I'm normally not a gold bug, but in this market, I am somewhat, because I do think that we're going to see some inflation on the back end of this that we haven't seen yet. So very good comment. I so appreciate that. So let's see. I thought, okay. So let's see here. Bobby on the talk. I grabbed his SPY call last week. It's looking good. Excellent. Thank you. Another great movement. It's interesting. I mean, up to the, and I was the one, I've been basically saying, oh, I think I would see a bounce at 280. I've been going on and on and on about that. But guess what? I'm wrong. I think it's going to go higher. And I think the comment earlier that indicated that, we may be looking at 300 and maybe even 320 before it reverses course. So, there's some definitely money to be made. I think this earnings season is going to be fairly good for the stocks that are reporting this week, because there's so many techs. Now, I have up here, and I want to bring this. I want to bring this up. We want to start looking for stocks to potentially short, and I want to show you these. These are stocks that have already issued profit warnings. Okay, so I don't think that when these guys report, they're going to be doing a whole lot of good things. So how can we make money when a company goes down? Well, the easiest way to do that is to short the stock. Now, of course, there's going to be a lot of short interest on these, because a lot of professional investors do this kind of thing too. So if you don't want to short the stock directly, a way to go would be to buy a put on, and that will limit your downside risk to basically the price of the put, but your upside could be significant. So these are the companies that I want to kind of go over with you. SL Green Realty. Okay, this is in the very weak realty sector. I think that's a well worth looking at. In the industrials, Emerson Electronics. Emerson Electric. I used to love this company, based in St. Louis. Really great company, but they're going to be weak because industrial demand, because of the shutdown, is going to be weak. Globe Life, which is based right here in the Dallas suburb of McKinney, Texas. They have a stadium over. I'm excited because I like baseball. I don't think we're going to get to see any baseball this year because everything's going to be shut down. But they just built the Rangers built a brand new park, and it's over in Arlington. And it's called Globe Life Field. So there you go. Paychecks. Now this one's surprising to me. Why Paychecks would be so weak, but I guess it's weak because we're having record unemployment. But I don't know if this one's a really good short candidate, because I do think that once we're after the shutdown, there's going to be strong employment demand, and I think they'll go right back up. This is a company I'm not familiar with. HSS Market. I'm not familiar with them. Now, interestingly enough, Verizon. Verizon is, it's potentially short, which is amazing. Verizon is so large, you're not going to see a lot of downward movement there, but it's very interesting. But I wouldn't short Verizon just because I do believe that they're part of the very important 5G rollout. I mean, I know they're spending a lot of money, they've got a lot of debt and all that, but they are cash flow machines. AT&T, which is AT&T, and Verizon are some of the, they're some of the most indebted companies in the world, but they have lots of cash flow. Edwards Lifeline, this is another one that I wouldn't short either. They typically have they make reagents and a lot of other things. Now, Prologis, I think that's where you want to look. Real estate as a sector, I think, is highly shortable. The reason is because after this COVID-19 thing happens, we're probably not going to go back to quite the same setup as we were before. The demand for office space is probably going to go down. So it's just it's just a weird thing. It's just a weird game. So real estate sector definitely is where you want to potentially short. All right, now some psychological market indicators that I want to go over, and this is kind of an interesting chart. This is the chart for this is the chart for the put to call ratio. Now, what is the put to call ratio? Well, typically, when the market when we see a spike above this red line here, this is the 1.5. Okay. Typically, there are more calls that are purchased relative to puts. But when the amount of puts exceeds the number of calls, that is a very bearish indicator. And as you can see, and it makes perfect sense, because look at here in March, this is when we had the huge market fall off. As you can see, it peaked above this 1.15. So the market was very, very bearish. At this point, this is when I started shorting the SPY, and I looked at this chart and said, wow, look at that. The put to call ratio is above 1.15. Now typically, anything above 1 is bearish, okay? 1.5, really bearish. So I was shorting the SPY during this period of time. As you can see, this is when the injection of capital happened into the market, and then it bottomed. And then now we've seen it we've seen it spike up once, thinking this spike up here was thinking it was going to go down further. It didn't. It started to move up, and as you can see, it's gradually gone down. Now, remember, this is kind of a counter indicator. So if this is headed downwards, typically the market sentiment based on the puts and calls is that we are going to see a strengthening in the market. So, and we're not going to see a bottom. So this is one of the reasons short term I am not as much of a bear as I was just a few weeks ago, about 2 weeks ago. I'm much more bullish right now, at least short term. That's the kind of thing that we got to look at.
Good afternoon, everyone, and welcome to Stock Market Today. It's Melissa Quorum, and I'm joined by Justin Nielsen.
I have to turn this off. Wow. Okay. Sorry about that. I got a feed from the IBD. Sorry about that, because it's normally not supposed to play there. Anyways, bulls versus bears. Now this is really interesting. When the percentage of bulls crosses bears, the market bottom is more likely. Well, we were crossed there, as you can see, but now we've come back to a normal position. So I don't think we're bottomed on the market, and I don't think we're in a bottoming process. So there you go. It's a very interesting way to look at it. All right. So let's see. What do you think, Uber? What do you think of Uber? Pick some strikes, fix some shares at 29, might jump into calls short term. Okay. Well, I mean, that's definitely a way to go on that. But let's take a look at Uber really quickly. The biggest issue, I think that's they're Uber Technologies. Okay, great. Let me look at the chart on Uber here. Wow, look at those. Nice. Wow, look at these calls. These calls are strong, man. You know what I would do in this case? I wouldn't be buying these calls. I would be buying the stock and then selling the calls. That's how I would play this. I think that people really want to buy these calls. So it's a good time. This is a good candidate. This is actually a really good candidate for a covered call strategy. And since you're only talking about a $29 stock, oh yeah, okay, very good. This I think you might find a very nice pickup. You could probably make at least short term about at least 10% or more. The 30 calls, the May 15th 30 calls are going for 220, which is excellent when you consider the underlying price of the stock is only $29. So that's a 10% return right off the bat, just by buying the stock and then selling the covered call. So that might be where you want to be. Wow. What do you think of Regis Corp? I think this is not a good stock. Let me put this up on the screen here. What do I think of Regis? Well, I happen to know a little bit about Regis because I used to rent from them in a place called Highland Park, Texas. Kind of a nice place. I was just for sake of full disclosure. Now, the thing about Regis is I think that they're sort of like an upgraded WeWork. So I don't think they're very, very good. They might be a good short candidate though. I wouldn't be long in Regis. I just wouldn't be long in Regis. Let me see if I can get a price for you. Regis. Yeah, Regis Corp. Okay, let me give it. Yeah, currently it's trading at $11. Let me look at the chart on this. Yeah, it's up, but I just don't know. This is not it's up strong today. I don't know why people are buying this. I think that this is a snapback. I think what we have here, boss, is that we have a situation where it's been heavily shorted. Yeah, this is definitely a short cover. This stock has been heavily shorted for a lot of reasons, and now people are having to cover those shorts, so it's causing it to move up. But long term, I don't like this stock because I don't like the sector that it's in. So that's my take on, at least my take on Regis. Let's see. Next question here. And by the way, for everybody on TikTok, I'm actually taking questions off of my YouTube feed, as well as on TikTok. So, I mean, as well as on TikTok and on Periscope. Apple's delay in 5G phone. Boeing says it could be years. Yeah, exactly. I'm very right on. Yeah, market trader, this is right. You know what? Here's the thing. Let me just give you kind of a heads up on Apple. On September 21st, 22nd, Apple is going to try to roll out 5G. Now, why haven't they rolled out their phones yet? Well, because the network is not ready yet. AT&T probably will be very big in this one. That's traditionally how Apple has moved its stuff out. Kind of leads with AT&T. T-Mobile, which merged with Sprint, is going to be in the 5G space. Now, Verizon does not have. That's kind of the third big network. Doesn't really have as good cover on 5G. Apple is not going to roll out its 5G phones until they can make it work, and that really won't happen until at least the third quarter. So I'm looking at about the September 21st, 22nd timeframe for them to announce their 5G phones, and this really has to do with the availability of 5G connectivity, at least here in the United States. So that's a major thing. Now, there is a play, a subsidiary play on this. There's a company called let's see. It's a chip maker. Symbol is OVO. Let's see. Okay. Did I get that right? Oh goodness. Oh heck! I am sorry. I gave you the wrong information. But there are some subsidiary plays in the chip space for 5G. But really, for Apple, I don't think I think Apple is going to delay the 5G, as you say, market trader. That's absolutely right. The reason that they're delaying it is because the 5G network isn't ready, and also the demand isn't there. If you notice, they're trying to sell other copies of phones that are going to make it better. So, oh, I'm sorry. Yeah. Yes, you are absolutely correct. You win. It is ORVO. By the way, everybody, in order for the 5G phones to work, you have to have RF frequency, RF radio frequency radios built into each of these phones. And there's a chip maker, ORVO. They're based, actually, interestingly enough, they're probably their biggest fab is right here in Dallas, interestingly enough. And they make this chip, and it's going to go into every 5G phone made, even Huawei phones, Samsung, of course, Apple. And this is stock that you really, I think that, it's sort of a story stock. I'm typically not as big on story stocks, but this one is a sort of an exception in my world, because I do think that after September 13th, September 20th, you're going to see a pop in this stock. Why? Because once 5G comes online, we are going to see tremendous uptick in the demand for their little chipset, which is going to go into every of these new 5G phones. And 5G is, don't kid yourself, 5G is going to be a very, very big deal. Why? Because it's going to allow things like data centers to communicate much, much better internally than they can right now, because instead of using wireless, like a lot of these data centers are going to use wireless. There's also going to allow things like simultaneous monitoring of vital signs for telehealth. So there's just a lot of stuff that 5G is going to make possible. So it's really it's really it's a big deal. So this company, QRVO, is the one that really pretty much makes the chipset that everyone's going to have to use. About 99% of all the people are going to have to buy their chips from this company. So it's very, very interesting. And interestingly enough, this production is not sourced, is sourced in the U.S. Now, obviously, they may be rolling it out to some of the big fabs like TSMC. For those of you who don't know, there is a company called Taiwan Semiconductor Manufacturing Corporation, which makes a good chunk of the chips for just about every company. And this includes Apple. This includes even Intel and Texas Instruments use them as a fab because they have some very, very good technology. But QRVO, as far as I know, is doing all this stuff in-house and in the U.S., which is great. So there won't be any of these demand problems potentially from China that you have with other products like this. So this is a very good stock, QRVO. Just want to put it on your radar, and hopefully it will work. Let's see. Okay. Called out Nat last week, looking pretty good. Yeah, Bobby. I should have taken your advice, because that is been strong. Yeah, Nordic American, that has been strong. My normal bias is against things in the transport sector, but you were totally right. So look at that. Look at that nice move. It's now it hit a high of 725. Now trading at about 698. Excellent. Yeah, that was a cup and handle, and there you go. So hey, I have a lot to. The market always humbles me, and thank you very much for that, Bobby. That was super. I hope you made some serious money, because you definitely deserved it. That was an excellent call. What do you think about? What do you think of Uber? It broke the moving average of 50. I think that Uber, Uber's one of those stocks that a lot of people want to be in still. Shed some light on GE. Okay, great. I have a question here from TikTok about General Electric. Just for sake of full disclosure, I went to Washington College as an undergraduate, and that is the same school that the CEO of GE, Larry Culp, went to. So actually, he was right. He wasn't in my class, but I knew him. Believe it or not. I mean, one of my absolute brushes with greatness. It wasn't me, but it was him, and he did okay. Yeah, it's trading on. No surprise here. I just, General Electric just has a lot of issues. I mean, tremendous debt overhang, the unwind basically of GE Capital, which, just practically destroyed the company, and the power division, which is having a lot of trouble. So You know, again, unfortunately, as great a stock as GE was, it was on the Dow Jones for like 120 years, I think. Maybe not quite that long. It got delisted. It got removed from the Dow Jones because it shrank so much. But it's just got a lot of real problems, and Larry is going to have to really restructure that, and he's capable of it because he ran a company called Danaher in Washington D.C., which has done tremendous. It just was basically a collection of Rust Belt companies, and he did a fantastic job there. So he's definitely up to the task. But I wouldn't be going. I would wait until we saw some confirmation. I typically don't like to buy any stock that is going to sell below $10, just because you increase your risk that way. And unfortunately, General Electric is selling significantly below, 100% below, 50% below $10 approximately. So it's not really that strong right now. It's just sad because it's a great company, but I wouldn't buy it. Okay, great advice. Thank you. Check out now. Yeah. Thoughts on GE? Well, that was sort of my, okay. Oh yeah. Thank you, man. QRVO. And this is one you definitely want to watch list. QRVO. I'm trying to, unfortunately, the way the stock market works is that it looks at the future, not at the past. General Electric, for as great a company as it is sort of the past, unfortunately. QRVO, it's the future. It's sort of the future. So we're going to bet on the future, probably not on the past. Now, I wanted to bring up this other slide here, kind of show you, this is the CBO market volatility. And basically what's happening is that as the more fear, as you can see, the more up it goes. So this is about March 23rd. It was at all-time high. As you can see, it's moved back down. So basically, this is why right now you don't want to be in the TVIX, because that basically multiplies the action of this little volatility index. While it was moving up, the TVIX was an awesome investment, and then as it came down, not so much. And then it came clipped up here and then down. This again is the 50-day moving average here. And so it's below the 50-day moving average. This means that we are in a situation where we're reducing volatility in this market. And, even though I am not totally convinced that we're out of the woods, right now, at least for the short term, it's moving to a less volatile environment, and it's looking, to come back in. Now, what does this mean? Well, this means that the strong are going to get super strong, and that's mainly the technology. That's the NASDAQ 100. So I wouldn't bet against the NASDAQ 100 right now. Like the SQQQ would also be probably not the best bet you could make. Now the TQQQ might be, because that is going to take a bullish position on the Qs, which is the NASDAQ 100 basically. And that might be a good investment. But right now we are seeing lower volatility. So we're seeing people come back into the market. Now, I believe people are going to come back into the market, but as people come back into the market, you're going to see these companies that are going to have bad reports, like that list I was showing you earlier. Let's see if I can move back to that slide. Let's see. Yeah, there we go. Oh, there we go. Perfect. This is the S&P companies that have issued profit warnings. It does not believe that everything is all good, because we have a shutdown economy. That's not good. I think that the real estate sector is in commercial real estate sector is extremely vulnerable. So this is where I'm looking to short, and this is a list that came up with that have issued profit warnings. So this is a really good place to look for companies that are going to possibly be shorting candidates. All right, let's see if we have any more. Hi, Jim. What is your opinion on USO? Oh, okay. The famous USO. For everybody out there, I just wanted to kind of give you an idea of what USO is. It is the ETF that tracks basically the commodity price of oil. Okay, and this was split. There was a reverse split on this, so just to get the price of the shares up. And even those have gone down. So right now it's trading about 218. And, who knows? There may be another reverse split on this. This is just amazing because, the price of oil is down again. And, until we get these supply demand things worked out, this isn't going to change. There's just not enough demand for oil right now because we have everybody on lockdown. And also we have a lot of rogue states like Venezuela and states like that need to sell their oil because they have dollar obligations that they need to meet, and they can't get dollars any other way. So that's pushing the price of oil lower. It's just not a good place to be in right now. Russia basically shot itself in the foot by trying to have a price war with Saudi Arabia, and Saudi Arabia is going to win on that one because they have more oil than anybody does. And, Russia just basically hurt itself by, helping crater the already low oil price. So, we have oil under $20 a barrel, which is not economic. Oil has to get up to about $50 a barrel at least in order for the system to work on and fire on all cylinders. So, and we have to get the demand back up. But here's the thing: when you have a sudden drop in demand, this is what they call deflation. Now, you think, wow, deflation. I shouldn't even say that word because the economists won't even say it. They'll say disinflation or something like that. But right now, at least in short term, we have deflation going on. That means that cash is king. And the real cash, which is gold, is even more king. That's kind of king of kings is gold, right? So we have demand dropping. So therefore, commodities typically have a lower price. Now, people aren't making money on commodities. This means that all of the third world, which basically only sells commodities, is in trouble because they have nothing to sell, and it's a problem. Even here in this country, we are a major export. We are a major producer of oil. We're having problems. In the Permian, which is to the west of here in Dallas, you have many of the producers that are just going to cap wells. Now, the price of oil, I believe, will eventually go up because oil is used in everything from plastic. Even, everybody concentrates on its use as jet fuel and that, but it's also heavily in packaging and everything. A lot of things are made out of plastic. Even, just about everything. Most industrial chemistry in some ways is based on oil. So oil is going to go up in the medium and the long term. But right now, it's not a good investment because it's very, very low. My investment philosophy is not trying to buy bargains, because typically you buy a bargain and then it goes down and it becomes even more of a bargain, but you lose. It's better to buy things where the money is flowing. And that's why I like to buy high and sell higher, that at least when I'm going long. Now, when I'm going short, I like to be short in things that I think are going to have problems. I believe that the best short candidates right now in this market are companies with high debt. When you have deflation, even momentary, even deflation, short-term deflation, you have situations where if you have a heavy debt load, even if you've refinanced that debt, it becomes a problem. This is a problem in the real estate sector. This is also going to become a problem for a lot of homeowners, believe it or not. Even though there's super low rates, if you don't have a job, you can't pay those mortgage bills. So we're going to have a situation there too. I know I'm experiencing it myself because I have a rental in California where I've had great tenants for 8 years, and all of a sudden they can't pay. Why? Because everybody's lost their job, basically due to this coronavirus thing. So anyways, that's sort of that. Now I'm coming basically to the end of the hour here, which is always wonderful being with y'all. I want to show you just a few things. Hopefully put these banners up. Basically, on Facebook, we're going to be broadcasting on Facebook. I'm trying to figure out how to get the Facebook address going. But on YouTube, please subscribe and like us. I need just one more subscriber to my YouTube channel, and then I can, I get to a different level and I can do a lot of more stuff and broadcast to more people. So if I can just get one more subscriber, that would be excellent. I really appreciate it if you do that. Also, I'm building my mailing list up. I want to send out some stock alerts of just trade ideas that I have, either shorting candidates or option plays that I have, or potential longs like I was sharing with you today, because I don't have, unfortunately, time to share everything that I'm working on. I just try to pick out the best things and show those. So our mailing list, dallastradingfloor.com. And my name is Jim Malone. Now, if you want to talk with me directly, I do answer my phone, which is very unusual in this day and age. And my number is 214-233-5087. Now, if you do ring me and I don't answer, just leave a message and I'll get right back to you. So I appreciate everybody so much for watching my show. Thank you, man. Thank you so much for subscribing to me. And that really helps me out. So again, I'm going to be signing off for today because I'm at my hour time allotment, but I'm going to be broadcasting tomorrow at 11 o'clock, same time. And please, if you can write down your questions and maybe I can answer them and help, and we can all make some profit together. So that's the way I like it. And we're going to make some profit this week. This is earnings week, and I think we've got some good opportunities on potential option plays for earnings. And I want to thank you all for taking a look and signing off, and have a good day and be safe. Okay. Talk to you soon. Bye-bye. And everybody there on everybody on YouTube and on Periscope, really appreciate you taking a look at my show. I'm trying to make this the best I can. I'm a little bit shorthanded. Soon I will be back at my location at Dallas Trading Floor, my actual real building. I'm broadcasting from a remote location, so technically I'm kind of running the show myself, and it's okay, but it could be better. And I just wanted to put that out there. Our location here in Dallas is 17920 Preston Road, 3rd floor, and that's where Dallas Trading Floor is. If you want to ever come by and take a look, just give me a call, and we can arrange something for you. Again, thank you so very much for taking a look at my show, and please subscribe to me on YouTube and like me. I need the liking. I guess that's Facebook talk. And we'll see you tomorrow. And again, thank you so much and happy trading. Oh, wait a minute. I got 2 more comments. So let me do, all right. Yeah, okay. Oh, hey, thank you so much, Earl. So appreciate you, you taking a look at YouTube. I mean, YouTube's an amazing thing, isn't it? I mean, you can broadcast all over the world from your bedroom. That's pretty much what I'm doing. I mean, I know it seems like I'm sitting here above the city, but I'm really not. Sitting in front of a green screen. Thank you, Earl. Thank you for. Please tell your friends about it. I'm trying to get myself on LinkedIn as well, because there's a lot of people out there that might be interested in, trading their stocks successfully or making some investments. They can make some short-term money. And again, thank you again. I'll be on tomorrow, and I hope I hope everything's good. Now, be careful out there. Wear your mask and all that stuff. And I hope to see you again tomorrow. Thanks. Bye-bye.